Hello guys, Steven Dex here. Welcome to this video. So today I want to do a recap of the entire month, what happened in May and April. So the overall market is changing a little bit compared to the last year of 2022. So let's go through pretty much all of the major runners of last couple weeks and let's get into it. So the first one we have is MMV. This one, it was a gap up short, but it had a weird, I would say, actions after the momentum shift. So this is one thing I want to talk about is most of the tickers that we're trading recently, they are really crowded. And that's number one. Number two, they are really easy to get shares to borrow. So after a few tickers like this, what happened on UCAR, what happened on MMV, I have some of the, I would say, tips to share with you guys, especially when you're running into the tickers that was very, very crowded in the pre-market, right after market open, how to really identify if it's a gap up short or not. So the first one we have, which is MMV. This one, I believe, is easy to borrow. I think it was a couple cents a share. You went from 1 to 4, so the extension range is, I would say, very sufficient. So whenever you are seeing a ticker that's a low float, easy to borrow, and with crowded volume, always pay attention to, I would say, shares to borrow and how much range did it perform after the market open. So it extended about 400% compared to the yesterday's close. So that's, I would say, sufficient enough range to be able to sure if the stock is easy to borrow. If it's hard to borrow, then the range can be a little bit less. Also, you want to focus on the ticker that's above $3. So majority of the gap up short, whenever you see these tech gappers, first of all, the criteria has to be above 70%. And if it's easy to borrow and crowded, I would recommend avoid those tickers as much as possible if their volume estimate is over 100 million. So first thing, you want to estimate the volume, which you want to wait for at least an hour, half an hour, if the stock is really crowded, if it trades over 10 million before the market open. So this is a very similar situation compared to 2021 when market was on drug with the stimulus money. So the volume is very crowded, so the edge doesn't really come until after 10:30 or 11 o'clock. And that's very crucial for you to wait after the market open, especially for the crowded trades. So pay attention to the pre-market volume. Number two is you want to wait for consolidations, but sometimes consolidation does not work. It does not work on biotechs. It does not work if the stock trades over 70 million shares in before 11 o'clock. And most of the fading percentage, if the stock tends to get really crowded, either they gonna only fade 50% or they gonna do bounces up and down, up and down. So it's much better to be able to, I would say, scalp instead of wait until the close. You want to take some profits when stock is panicking. You want to add into the push after a bounce, then cover by the end of the day. Typically, it's the 50% mark to take your profits, then add and close it by the end of the day. And most of the crowded volume tickers, they do bounce in the second day. Typically, they bounce into the consolidations of the previous day. Majority of the time, they're not above $3, so it's not worth it to short going into the second day. Also, the volume is really low, and this is what happened on MMB. And this is, I would say, a classic gap up short. And let's look at UCAR. Now this is a completely different gap up short. First of all, we want to pay attention to the range, which extended from 3 to 5. So if you want to trade it as a gap up short, you always want to wait about after 10:30. So the stock pushed to about 6.5, consolidated no more than 1 hour. So it consolidated for a couple of minutes around 650 and kept parabolicing. So this is one of the things that when the stock is very crowded, always wait for consolidations. Don't ever try to short into the parabolic push. They are not worth it. And when the stock extended all the way up to the $8-ish area, it consolidated about an hour and it went through the consolidations. So personally for me, I would probably short into the consolidations, which I did. I took a loss into this consolidation breakout. After that, I took a little short by the close and closed by the end of the day. So these type of gap up short, first of all, they completely went through the average pushing percentage of gap up short, which is around 20 to 25%. So once the stock breaks its average statistics, it's not a gap up short anymore. So it doesn't fit that gap up short is sufficient enough pushing percentage. It went beyond that. So typically it happens on a micro float, but it doesn't really happen on a ticker that trades, I think it was a 3 to 5 million float, and it was relatively easy to borrow as well. So it's also a couple cents a share. And easy to borrow tickers, they always wait until the stock extended at least 200 to 300% before before you actually short into it. When the volume really gets crowded, it's very difficult to be able to aim for top tick. So you don't have to top tick, wait until the consolidations and to see and evaluate how much extension did it get, did it gain, and how much volume did it trade before 11:30. And if it's trading way too much volume, let's say 100 million before noon hits, then make sure sizing is small or do not trade that thing at all. Now going into the second day of UCAR, this one gapped up into the second day and it went to 15, went all the way down to 11. So from here, this one did qualify as a multi-day rounder, and the problem is I thought about shorting around 15. I was waiting for consolidations or either form a massive consolidations or dollar block. Turns out it didn't, and the support is right underneath of around 10 to 11-ish. So typically when you want to cover your position, you do want to cover a little bit above the support, and which is around 12-ish if you're shorting around 15. And $3 reward, that's not really good reward. So in terms of shorting into UCAR into the second day, and it was also crowded before 10:30. So in terms of entire day, I didn't really touch this ticker at all. I don't think on the risk reward part, it's not really worth it. In terms of the pre-market action, I think it's worth a short because it shows some weaknesses before the market opened. So that's the two main tickers that happened last week. And make sure track, I would say, how much volume did it trade before 10:30, how much volume did it trade into the consolidations, how much dollar did it traded before the momentum shift. Those are the key factors to be able to pay attention to the, I would say, very special, factors that happened in the last 2 weeks. And those 100 million volume days, they do not happen almost in the last year. So make sure track your statistics, and when volume is very crowded, typically there's more edge to, I would say, to catch, and there's more profits to be made. So just be able to adapting to the, I would say, current market conditions is very important. All right, guys, that'll be it for this video. Thank you very much for watching. If you have any questions, make sure to leave a comment below, and don't forget to click the like button. I'll see you guys in the next one.